Hello, how you doing, everyone? Welcome back to my channel. Um, so how's everyone's first week of training in 2021? I hope you guys did good, and there's a lot of things happened already. The first week in 2021, and let's keep it up. It looks like the market is being a little bit volatile, and especially yesterday and today, and today I'm gonna talk about this SPAC symbol IPOE, which is just announced a definite agreement, right before the market close, and and this thing is just go to the moon type of play, went up 60% during the day, and let me dive into it a little bit, see who's the man, the CEO of this SPAC. This guy is, super well known, and he's pretty much one of the top guy in the SPAC world. He's pretty much the king, the king of the SPAC. Okay, everything that he owns, everything that he managed, the fund that he managed, the first one that he took it to IPO was IPOA. Now is, now the ticker changed to SPCE, which is the space type of business. Okay, and it's the version, Galactic, and this one right here that actually went public, through the SPAC last year, I believe so, and and it did pretty good. That when you look at the chart, last year when it went public all the way, it got up all the way to 42, after after the announcement, after the merger complete, and of course, like all the other SPACs, and people would sell off a little bit, now start going going back up, because I mean, the space type of sector now is is also a trendy sector. So it's one of the trendy sector right here, for 2021, and a couple more years down the road, it's still going to be pretty trendy. Okay, so this is used to be a IPOA, I believe so. Okay, the second SPAC, this guy Chamath. It's called Chamath. Okay, Chamath. Okay, so he used to be, he used to be a executive at Facebook. Okay, so he's like one of the earliest guy that joined the executive team. When Facebook is still a pretty small company. So and he is also a stakeholder, the board member of Golden State Warriors, and he's the founder of this investment firm, social capital, and his main focus on this fund is bring private company through a SPAC merger, which is the special acquisition merger, bring them to public. So majority of my YouTube video channels are are very focused on SPACs in 2021, because like us, all the retail investors, we do not have the advantage of get into an IPO that is at the at the discount price, or even at the a good price, because usually all the traditional IPOs, like when they go public, at the time they wish to the stock exchange, and for our retail investor, in order for us to get in, to able to buy shares, usually the price already skyrocket, 50%, 100%, a few 100%, even like the hot ones. And so we had to pay a huge premium for the IPOs, right? For example, like Airbnb, which is recently IPO, DoorDash, which recently IPO, AI was recently IPO. All those, by the time that it got on the market, and all the retail investors like us, when we want to get in great companies, but you're already paying like 50, 100% premiums. So the great thing about SPAC acquisition is like you'd be able to get it on the floor price. Every single SPAC usually would be like the $10 price mark, and they put in the fund, they put in the fund, and then they're looking for merger targets. So you'll be able to get in before, before they went public, and everyone, and everyone, know about, right? So, it's a big advantage for people that, like retail investors like us, that able to get in, to IPO a lot earlier than, than the traditional IPO. This is, you guys have to take advantage on this, SPAC, merger, type of, place. Okay, guys, if you guys really don't really understand what the SPAC is, later on down the road, maybe in a, in a week or so, I'm gonna have a video to explain, for beginners, and, to explain step by step what's the SPAC merger is, and how popular it is now, and what's the advantage that you can take from the SPAC merger type of place. Okay, and just stay tuned on my YouTube channel. The next couple of videos, I'm gonna talk about the SPAC merger, for beginners, and for you guys to understand what the SPAC merger is, and how big this opportunity is, to get into a SPAC at this moment. Okay, guys. So so I just go a little bit deep in, why this guy is so, is so big in SPAC. So he has so many different mergers already, that I mean, he had a Facebook executive, background. He had a lot of people trust in him, all the stuff that he did, all the stuff that he researched, and he, that he invests, he already did, his team and, and himself already did a lot of research on the, on those companies that, that he, go through the merger with the SPAC, right? So, for us as an investor or trader, we have a lot of confidence, and, when you have a great, management team, like, like this guy, leading, right? So like, you feel a lot of comfortable, you feel so much comfortable, go into his, his investments, right? So yeah, let's go back to like, okay, the second SPAC that is very popular that he, that he bring merger, to was like IPOB, which is, merger with Open Door, and this one right here is also skyrocket, right, from 10 all the way to like 30s. Okay, now I'll pull back a little bit, which is normal. It's very popular. Go check it out. Their website is Open Door. So, they sell houses, and, it's pretty popular platforms online. Okay, I'm not going to go too deep into it, but this is, one of the second IPOB. Up to the merger, they changed the ticker to OPEN. Okay, go check it out. So they have, there are two companies up to the merger that he managed, managed to have like, 100 to 200 returns, okay, after the merger. So, it's a little bit volatile, okay? The SPACs you have to expect, you have to handle like the volatilities, okay? So that's why, on our Discord, we try to, tell all the traders to get into the SPACs that, and the 10s or, 11s and 13s, the maximum, on the floor. So the more closer to the, to the $10, floor price, the more, like the more risk you can manage, right? So you have to manage your risk in order, to think about returns, okay? So, but on the other hand, when you invest in like traditional IPOs, you really don't know what the, you really don't know what the, the floor price is. You kind of don't know when, how deep or, how low the, the IPO would pull back, but for the SPACs, you already know that before the merger is $10. So you already know that $10 is the floor price, before the merger. So, a lot of people holding their shares at $10, right? So the $10 would be a huge, strong support level. So, so you can manage your risk from $10, right? If you buying in the SPAC, stocks, right? You buy in at $12, so your risk level is 20%, okay? But, but 20%, but this stock, can go up to $20 or $30, $40. So you are pretty much risking about like, 20% to make, 100% or 200%, return, right? So, it's very easy for you to, calculate that risk and reward ratio. So, in order to be a good trader or investor, you need to calculate your risk reward ratio. Okay, does it make sense or not? you know, if it doesn't make sense, then move on to a better play or better investments, you know. So, you know, but remember guys, you know, as a trader or investor, you got to manage your risk before you think about returns. Okay, that's how you're gonna stay in these games, you know, longer than everybody else. I bet you guys heard a lot of your friends or families like, oh, the stock market, you know, I lose money, I'm out. So this is how it is. You know, you don't know how to manage your risk, you're gonna be out the, you know, the game on, you know, on the stock markets real quick. Okay, so make sure you protect your capital. So, you know, this is my strategy. Make sure you protect your capital before you think about gains. Okay. All right, guys. So IPOC is also recently, you know, uh, finished the merger. After the merger, well, like, you know, like yesterday or something, that merger with Health Clover, I believe so, right? So, you know, so this, you know, so this stock right here that, you know, consolidating around $10 before the merger, and then it shot up to like, you know, 17, and now it's still sitting at that 16 level. So, you know, so as you can see, like all his stock, all his you know, SPAC, you know, it went up, you know, it you know, it definitely had a lot of, you know, investors and traders get into, you know, all his specs. So now today, the big topic I'm meant to talk about today is the IPOE, which is, like I say, they announced the, you know, they put up the SEC, you know, website, and then, you know, they just filed an 8K to announce, you know, to announce a, you know, a merger with the financial service platform. Okay, definite agreements with the, you know, with IPOE. Okay, this platform is social finance, which is called SoFi. Okay, so let me go into a little bit more on what's going on today, how crazy this thing went after the news went out. So before the news, was still sitting on like 10, you know, not 10, maybe like $12 or $11, and you know, it shot up as soon as the news went up, you know, like, you know, came out, it shot up to like, you know, almost $22. Okay, so that's another reason that I always like to, you know, buy in a SPAC before any definite agreements come out. You know, I usually buy in before the LOI, which is the letter of intent, or I usually buy in when there's a rumor. So once that you know, once that, you know, definite agreement, you know, come out, you would take a huge, you know, huge upside right here, right? So usually that I would sell a one, you know, like the first or second days of you know, after the definite agreement, usually would pull back, you know, usually would pull back right here, you know. So tomorrow it might go back, you know, go up a little bit more, because, you know, it's still going to be a lot of, probably it's still going to be a lot of buyers, you know, keep jumping in, right? So, you know, usually a hot SPAC usually would, you know, would continue going up for like 2 or 3, 4 days, probably, you know, and eventually they're gonna pull back, and they're gonna cool down, and then they're gonna consolidate, and then before the merger they're gonna go up again, right? So, you know, so they're all exciting to get in, you know, like get on the boat and just, you know, ride the merger, you know, rally. Okay, so that's how you play it. Okay, so okay, let's, you know, let's look into this, what, you know, what the company they merger with, like, you know, what they do, like what it is, you know, what is this, you know, this is one of the exciting part that I really want to know, and how excited this, you know, this, you know, this investment firm that lead by, you know, this SPAC king called Chamath. Okay, and okay, so this company called, you know, SoFi. So it's like an online, so it's like American online personal finance company that, you know, that's found based on, you know, based in San Francisco. Okay, and they put, you know, they are part of their financial products are including student loans, financing, mortgage, personal loans, credit cards, investments, like, I mean, investings and bankings through their mobile apps. And okay, that's the desktop interface. Okay, and the interesting is this right here, that you know, the founders is, you know, they, you know, it's for the student that, you know, met in Stanford graduate business school. Okay, so it happened that pretty much, you know, all the tech companies are founded in you know, Stanford, right? I guess, you know, so, you know, so they, you know, they have pretty good, you know, education background, as you guys can see, right? So they're all from, the founders are all from you know, Stanford. And, you know, and this company been along, you know, 9 years, and, you know, you know, San Francisco, and let's check out their website real quick and see what they have. Okay. Okay, look at this, right? This is their website, right? So pretty simple, pretty simple, right? Pretty simple. That's what you want, right? As a consumer or as a customers, you want to go into, a app or a website that is so simple you can just go straight to, the stuff that you need or the product you need. So over here, that I like the website. It's so simple that, okay, you want student loan refinance? Okay, just right here. Okay, you want personal loans, just right here, or you want, mortgage, just right here, and you click in there, it give you a, a little bit more detail. It link you to a different, a link that, have a lot of details, in that product, right? So instead of you in some, platform that is so confusing that you try to find the product you need, it's gonna take you 10 or 15 minutes. So this is very convenient and very organized, website, in my opinion. Right? You look at student loans, right? You click in there and just pop in there. Okay. So right now we're just pretending that we're the user or we're the customers, and to test out the product and to test out the app and test out the platform and see, hey, are you gonna like this platform or not? So as the customers. Okay, so let's say that, okay, you wanna do mortgage refinance and check it out. Okay, so you have all this detail in there and the layout is pretty simple and pretty simple and pretty organized and pretty straightforward. So that's I pretty like I like it pretty much. Let me see. So like I say, you're gonna check out their products, and I'm not gonna click way into it, but based on what I'm seeing right here, that I like the platform is so simple, easy to navigate. Okay. Okay, the next thing that is going to be a very important thing that I'm going to go over their financials and, their investor presentations, which is, that's what you guys waiting for. Okay, so, all right, guys, SoFi, get your money right, borrow, save, spend, invest, and, and protect. I like the slogan. Okay, guys, let me dive into it and see what they have here. Okay, they say, SoFi is time in the financial services. Okay, they try to compare, with all those big guys right here. Yeah, look at Visa, right? They are like 494, billions, market cap. I believe this guy right here, SoFi, is like 2 point something billion valuation to, enterprise value at 2.4 billion or something like that. But we're gonna go into the slides and it talk about it over there. Okay, guys. So you see all those big guys, PayPal and Mastercards and JP Morgans. I mean, they all huge caps. So what they try to say right here, that there's huge opportunities for fintechs. Okay, for like financial services. Okay, so they're gonna be one of the small player, but but they do have opportunity to grow as all those big guys. So that's pretty much what they say right here on the slides. Okay. Okay. So their missions, like to achieve financial independence for everybody, all the customers. Great to know. Okay, so it's fast, fast to navigate, fast way to do everything. Okay, you buy stocks, you open accounts, borrow money, and all that. Okay, that's what we want to see. We want to see fast and convenience on their services, right? As a customers, I don't want to be, at the website or at the bank that it takes forever, for me to process its transactions, or or it's not convenient enough for me to to use it. Your app is not available, things like that, right? So they, there's two things, as a customers, that's what I'm looking at. Okay, I hope you guys are the same way. Okay, this is all the winners takes most fintechs. Those those huge companies right here that they all go through this type of services. Okay. So over here, just talking about like they had like almost 60% of people that increase using their fintech app. Users drive 80%, 8% gains in the penetrations. Okay, here's before the COVID and during the COVID. So it looks like even during the COVID, they still they still increase quite a bit. So which is good. Like during the COVID, pretty much a lot of people use apps, right, to to shop around, right, for even for financial services. Okay. Okay, over here is their management team, like team that like you can see like those guys is all from big companies and great experience, right? You see people from Amazon, Microsoft, Tesla's, Toyotas and Citigroups, and see all these big guys. Okay, so that makes you feel a little bit better and comfortable that hey, their management actually have great experience and they are a great team to lead this, startups to a better, bigger, company, right? So, okay, over here is, showing like, uh, you know, their member, so over here saying that on track to exceed, 3 millions in 2021, up 70%, up to 6 quarters. So their members actually grow a lot, which is their members mean their customers, right? So your customer space growing in 75% of year over year, which is great. Your customer space, base growing mean that your revenue is growing. Okay, your business is growing. Okay, the bigger the number, the better. That's pretty obvious right here. Okay, the products. Okay, doubling our multi-product members to 750Ks. Okay, those are huge number growing on their products. This is one very positive a graph right here. Over here saying the same thing on how how fast they grow on their revenues. Okay. Okay, this chart right here, they're saying that okay, you comparing, like they're breaking down to different categories like student loans and personal loan, home loans and money markets and investments and all that. And you see the percentage from like like quarter over quarter. So this one right, the dark purple is one, is the most recent quarter. So it looks like it's increasing compared to the previous quarter, increasing compared to previous quarter. It's it's leveraging, it's level compared to like the previous quarters. Okay, so it looks like it's keeping up with the previous quarter, or or even outperform the previous quarters. Okay, so which is a good sign. Okay, so this right here just talk about it, their products and their products, their products that actually also increasing on the estimates. You look at this like 2 million products and now they have 4 million products or so. So those are great numbers. Over here is just still talking about like the total account grow. You see those huge numbers growing. Okay, so they grow crazy. Crazy is the the past couple quarters. Okay. Okay, interesting part right here, right? You see, now we're talking about revenues. Okay, adjusted net revenues right here. That this company is actually have revenue. Okay, guys. So like I say, a lot of SPAC that doesn't have revenue, but this is actually has revenues, have 9 years operation. So this is something that you consider a longer term hold if you are investors believing in fintech, which is fintech is one of the hot sector right now, including like what EV, yeah, like EVs or or fintech, all the other renewable energies, type of things like that. You want to invest in a sector that that is trending, that's that's getting up there, right? You don't want to invest in a sector that's dying down. So so everybody is using online platforms now. Okay, so you want to focus in the company that you want to invest in, that they have some type of online platform that everybody can go online and you can shop online. Okay, you don't want to be just having a invest in a retail bank that they only have a branch there and they don't have any online services. Okay, so this is definitely a game changer, right? Fintech business. Okay, guys, and adjusted EBITDA. Okay, so as 2020 estimate is still negative, but next year we're looking great right here. So you invest in this company, or you should, like next year you start having positive EBITDA, which is great. Like as we see a couple specs, in my previous video, you need to wait 2 years in order to see positive EBITDA, right? So not just seeing positive EBITDA, right? You see like huge growth amount, 40%, 38%, 43%, and 45%, and you're seeing them already having revenue on 2020. Having this much revenue, 621 million revenue already, and you seeing that EBITDA growing at this certain percentage. That's another reason that people why they want to jump into it today, and 60% pop right after the definite agreement, because they know after they see this investor presentations, and they see that they see this company has potentials. Okay, but stay all the way to the end of the video. I'm going to explain that why you should wait to buy, or you should buy now on this company. Okay, and let's go down a little bit more. Okay, so you see the compound annual growth rate is huge right here. Financial service 5 years is going at 153%. Okay, that's ridiculously good numbers. Okay, especially with the revenue they're making now, it's gonna be huge. But is it worth at the price at almost $20 right now? So you $20 right now, right? At the at the $10 price at 2.4 million. So now already at $5 billion company, right? At $20 price, like I say, I'm gonna be talking about, is it gonna be should we wait to buy, or should we get it now, closer to the end of the video? Okay, guys. Okay, over here just still talk a little bit more. Yeah, they have more graph talking about their revenues. Okay, so we already went through the revenue. Looks great, great potential, great growth. Okay, they go a little bit more details on this, on this revenue growth and the EBITDA margins. Okay, over here, that this year we already have revenues of $621 million. Okay, and you see year by year estimates, 5 years, you're looking at almost 43%. Awesome numbers. Okay, guys. EBITDA, okay, positive EBITDA next year, 27 million. Great, for a startup company. Okay, and you're looking at 32%, which is $1.2 billion EBITDA positive by 2025. This is some crazy number right here, up to 5 years. Okay, guys, can you imagine like you cash flow positive at 5 years later? A lot of bigger company, a lot of company been here for a long time don't even reach those kind of numbers. Okay, and you talk about cash flow positive already next year. So you pretty much investing a company, a startup that you already bring in home money right in the bat next year. Okay, so instead of you keep losing money, or you don't even get money in until like 7 years later or 5 years later, which is like a lot of those EV companies you guys see now, where I'm not gonna have revenue until 3 years later, or I'm not gonna have revenue until like 5 years later. But this company, actually, you already making revenue and you have money, positive money coming in next year. So Okay. So over here, yes, you know, the SPAC valuations at 2.4 million, okay, with the pipe and all the cash they have on on hand and all that stuff, okay. So 2.4 million, okay, totally. Okay, okay, guys. So this investor presentations, pretty much is done right here, and I'm gonna go back to here real quick. Okay, so as you guys can see, right now we talk about it. Is it a good buy? Today is the first thing that is that is pop, right? So pop to it popped to 22 the first you know the first day of announcing merger. Okay, so usually like I say, usually when it pop 1 or 2 or 3 days, usually it might go up even a little bit higher to maybe 20, to maybe like 23 or 25 or even a little bit more. But usually up to that, usually it would take like 3 4 months to complete the merger, right? So usually up to that, it would cool down, right? It would cool down and consolidate. So we were looking at, I personally don't own any shares right now. I would wait for a consolidations after, after like a pullback. I want to see it consolidate right here, somewhat in this range right here, right? Hopefully with, it dropped a little bit more, right? So you want to see it consolidate, for 1 or 2 months. Because I say it's, usually those SPAC merger usually take 3 to 4 months to complete the merger. So you're expecting this company would be finishing the merger by, you know, you know, between February to like, April. Right? You had a couple more months for it to cool down before you get in. If you want to invest in the longer term, this is definitely a long-term play also. Even to do short-term swing, it's still a pretty good buy. So you wait for the consolidations, right? If you're looking for a short-term swing, you wait for it to pull back to the 10 level, and you just wait until like the merger day get closer, and it's gonna gap up, right? So you sell it before, or the day before, or closer to the merger. Is up to you, right? So but the people that who want to be investing in long term is still gonna buy it when it pull back. Okay, so don't trace it. Okay, so here's the thing: you don't want to get FOMO. You don't want to get FOMO in fear of missing out. Okay, you don't want to be fear of missing out a stock. It's always gonna be a lot more SPAC or a lot more valuable company out there that is undervalued. But at this point, $20, you are paying 100% of premiums at the $10 price. I would rather wait for it pull back, to like to like maybe like 16 16 or $15 range, or even below that, if they could. But usually those SPAC, the good ones, are usually consolidating around 16 17. That's the time that you probably start adding small position at a time. Okay, don't go everything in. Don't you know like me, like I usually get in a position if something like this already happened, that is already overpriced a little bit. I usually, like, if I plan to invest, let's say, if you invest 20% at a time, or you buy in 20% at a time. Okay, so don't put 100% of whatever investment that you're planning to invest at one level. Okay, at one price. You should like leverage in. Okay, okay, guys. And like I say, this is a great company, but at this moment it's already popped to 20, which is, like I say, 100% from the floor price of 10. I would rather to wait for it to dip down a little bit to consolidate, and at the 15 level or so, before I start adding positions. Okay, guys. But based on the historical company that he he brings to public to the SPAC, usually, you know, you see this, usually it announced, right? And then they pull back and it consolidate, and before the merger is shoot back up. So, as you can see, same way, right? It announced the merger, it go all the way up, right, to almost 20. and then go back down to like, wow, I mean, this one right here is not, this one right here is not even merger yet. This one right here, the IPODs is not even, announced the definite agreements. I believe so. If I'm wrong, correct me. But I don't think that it's, it announced the merger yet. Okay. IPOF is also waiting for merger. Okay, waiting for merger. Okay. So at this price, $13 price, as you can see, all their IPO whatever A B C D E F G or whatever it is, okay, it's gonna be above $13. This one right here, IPOF, would be a better choice if you want to get into a cheap, floor price. And you see what happened on IPOE, announced $23. Okay, so at $13, it's on the E now, so F is coming, right? So this might be a better entry point if you really want to invest in this guy's specs. Okay, so you have $13. You're paying a little bit more because people are rushing in right now, man. Because every single spec that he owns, it goes skyrocket, right? So this one right here is looking for target for like EV or high tech companies. Okay, but they haven't announced the merger yet. Okay, still pre-merger or pre-target announcements. Okay, so if you really want to get into this guy's spec, this might be a choice. Okay, IPOE, I would wait for it, wait for the dip. Okay, guys, and like I say, guys, still a lot of opportunities out there for specs. Usually when they announce the merger, if go crazy like this, I usually wait. If when they announce the merger, it's still sitting at like $10, $11, and I go very deep into their investor presentation and see, is it the reason that why it's still sitting at $10 or $11, or just like the investors or traders haven't noticed this spec yet? If they haven't noticed this specs, I would jump in ASAP, right? But this one right here, IPOE, people already notice this, and people already get so hyped up on it, and already up to 20, right? So I would just let it wait. If I were you, I look for IPOF, that pre-merger at $13, and that once the merger announced, it's gonna be like IPOE. But the thing, time out your money, right? You probably have to wait. How long it's gonna be? How long is for them to announce their merger? On IPOF, I don't know. It could be weeks, could be days, it could be months, right? So usually, all the SPAC had 2 years of time frame for them to get a target and finish the merger. Okay, guys, and 3-4 months of extension. Okay, so you're looking quite a long time, but I believe IPOF is coming out pretty soon with the merger target. Okay, guys, so sometimes you have to be patient. In the stock market, like there's no easy money. You gotta be patient. You gotta aim your target. It's pretty much like you gotta be a sniper. Like you have to be patient, and when you see a target, and you have to nail it. You have to be like real focused on it. Okay, don't jumping around different tickers or don't jumping around different companies. When you see a valuable company, you gotta go. You gotta stay like focused and get into it. Okay, and thanks for following my channel, guys. And I really hope that you like my YouTube video, and I hope that you enjoy what I'm saying. And I'm just trying to help out everyone to understand what the spec is and how to read financial statements and how to read the charts. And I just try to share my opinions on the stock markets and all this company that I believe in. Okay, guys, and please make sure like or subscribe my channel. Okay, I'm gonna have more video coming up pretty soon. Like I say, I will have watch list every single Sunday, and I also have a free Discord room. We just have a lot of great traders and friendly traders and really active traders on the Discord. I had a link below, and if you like to join, just go ahead and join, guys. It's gonna be benefit you guys. It's free and absolutely free, and then and we all in there talking about it daily, and real life, and any stock or any spec that updated news, we talk about it every single day, every single second. Okay, so hope you guys enjoy the video again, and if you have any questions, you can leave me a comment below too. But like I say, don't forget to subscribe and like, and your support, is huge for me, and it's motivating me to, to do better videos and be more consistent and find more good company for you guys to invest. Okay, guys, and see you guys next time. Thumbs up.